Mr. Secretary, the Senate is currently considering the Genius Act. You're familiar with that legislation that's designed to promote and regulate innovation in payment stablecoins. The bill aims to bring our payment system into the 21st century. Unlike slow and costly wire transfers, stablecoins enable direct peer-to-peer transactions that settle nearly instantaneously. The potential benefits are immense. These digital assets can remove friction in global payments. They can unlock working capital for more productive deployment and improve settlement and efficiency in financial markets. The adoption of these innovative digital assets is soaring, growing from around $45 billion in early 2020, around $4 billion in early 2020, to more than $200 billion today. If Congress can provide long-due regulatory clarity, this remarkable growth trajectory will only accelerate. So my first question, Secretary Bessent, my legislation requires that stablecoins be backed by cash or short-dated U.S. Treasuries. One investment bank estimates that the Genius Act would expand the stablecoin market from its current value of $240 billion to $2 trillion by the end of 2028, with most of the reserves likely to be held in U.S. Treasuries. What are the benefits of having a new and expansive source of demand for U.S. Treasuries in the years ahead?
Senator, thank you for your leadership on this important matter. As you know, the administration, led by President Trump, has made digital assets a priority, and making the U.S. the world leader in digital assets is essential for our goals. Your question is a very important one. In the history of the U.S. dollar as a reserve currency, there have been the numerous passages along the way where many people assumed that the U.S. dollar would lose reserve currency status, and there's always been a new mechanism that has cemented that. This administration is committed to keeping the reserve currency status and enhancing that, and I believe that stablecoin legislation backed by U.S. Treasuries, or T-bills, will create a market that will expand U.S. dollar usage via these stablecoins all around the world. And I think that $2 trillion is a very reasonable number, and I could see it greatly exceeding that.
You've previously spoken about the need to reverse some of the overregulation in capital standards, including a reduction in the supplementary leverage ratio. That ratio penalizes banks, or the level of it today penalizes banks by requiring them to hold excess capital against low-risk assets like treasuries and reserves. So my question, Secretary Bessent, is how soon could we see changes to the SLR ratio, and how could yields be affected by a more tailored approach to capital requirements for risk-free assets?
Well, Senator, risk assets are like cholesterol. There's good cholesterol and bad cholesterol. That some risk assets are riskier than others, and the problem with the SLR is it doesn't differentiate.
Yeah.
So we have been working via FSOC and the regulators, OCC, the FDIC, and the Fed to coordinate a change in the supplementary leverage ratio for the purchase of treasuries. We don't know the exact magnitude in terms of how it might affect yields, but what we have seen in the past is that when this requirement was removed, it had a substantial effect. So we don't know the effect. We do know the direction of travel. We don't know the magnitude.
Got it. I do think that a tapering approach, I'm pleased to hear it, will have a very positive impact on the markets. Thank you for that. And I know this has been top of mind and front of mind for you, certainly in recent days. You've been playing an incredible role in negotiating terms of trade for our nation with other nations. You're just returned from a big trip in that regard. And to the extent you could comment in a public arena on what sort of update you might be able to give us on trade and tariffs, I think we'd be very interested to hear that.
Yes. So as I've said several times before, there are 18 important trading relationships. They constitute between 90 and 95% of our trade deficits also. So our largest trading partners, but definitionally are also some of the worst offenders in terms of trade deficits. We are finding that these trading partners have come to us with many of them with robust proposals. Some have been a little slower to come, like the European Union, but have now shown better faith. The administration put a 90-day hold on the reciprocal tariffs and took everyone down to a global baseline of 10%. It is my belief that countries that are negotiating in good faith could be rolled forward. Our negotiations with the Chinese were extensive, deliberative, done with respect between the two countries, but also the understanding on my part that China is the most imbalanced economy in the history of the world, and that at 30% of global manufacturing, this is not sustainable. So we are looking to insert fairness into our relationship with the Chinese, and that can be done via them exporting less to us, or it could be done with what I would, to paraphrase from Ray Dalio, a big, beautiful rebalancing, where President Trump would like to rebalance the U.S. more in favor of manufacturing. We're down to about 9% of the U.S. workforce is involved in manufacturing. The Chinese economy is imbalanced on the manufacturing side. They need to increase domestic consumption substantially. Yeah. So if we could do that together, then the two largest economies in the world could get into better equilibrium that's fair for the American people.
Thank you very much for that thoughtful response. Now I'd like